Hello everybody, welcome to the technical analysis webinar this evening. My name is Troy, I'm the Senior Account Manager with AvaTrade. I'll be leading the presentation. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone runs into any technical issues as we go along, just let me know. As always, keep in mind, no one trade is guaranteed to bring profits. There's risk involved with every trade that you make. Obviously, there's also nice potential profits, which is why we're all here to go over some ideas from an educational perspective that hopefully will help improve upon your risk management, your P&L at the end of the day, the end of the week, the end of the month, to add some tools onto your tool belt, so to speak, as we go over some ideas and strategy concepts. And the idea here is to grow over time as a trader. Now, keep in mind that what we cover is not meant to be financial advisement. So as we go along, the educational side of things is something that AvaTrade puts a lot of pride in, and it should be very helpful for you. Now, if you want to read our full risk disclosure statement, it's found on AvaTrade's main website. As we move forward, we'll talk a bit about risk management with a special feature that's on the AvaGo app called AvaProtect. So keep in mind, if you're using mobile devices when you trade, the AvaGo mobile app has some nice features for risk management. We'll go over the AvaProtect feature in a little bit, just briefly. Now, as we talk about technical analysis, the idea here is we're looking back at the historical movements on the charts and trying to recognize predictable patterns, movements that indicate a change in tempo or a change in direction that might be recognizable as breakthrough movements, these sorts of things. And so the technical analysis, by studying the historical movements, many times can give you an idea about what could happen with future movements. Now, obviously, what happened in the past is never a guarantee of what will happen in the future, but it certainly can give you some ideas about noticeable trends and hopefully improve upon your win percentage as you search for preferable entry points and exit points. Now, there are a couple different ways to do technical analysis. One is the manual approach, which we tend to lean on more heavily in the webinars because it forces you to actually understand what's happening. When you manually find price levels and entry points, when you draw your own trend lines, support levels, resistance levels, this is forcing you to understand the price levels on the chart, the movements, the patterns that exist. And, when you start adding in indicators, which is another direction you can go with your technical analysis, they tend to try and do that for you. Predict when movements are overbought, oversold, when they may reverse. And indicators can work very well if the markets are moving in a way that is in line with the way the indicator is programmed. But also indicators many times can throw false signals if it's showing something that the indicator recognizes but not behaving in a way that the indicator would predict. And many times indicators are working very well in one direction and really bad in the opposite direction if you've got a movement that's running all day in one direction on the charts. And so when there's big news and movements just keep running one direction, indicators sometimes have trouble. And so using indicators to back up your trading plan or as part of a trading strategy certainly makes a lot of sense. And so that's kind of what we do in the webinars, is use our manual methods and use indicators, whether it's Fibonacci levels or a relative strength index or any number of indicators that are out there that can also assist you with finding preferential entry points and exit points. They certainly can be helpful in that perspective. Now, as we go along, please feel free to ask questions, to give input, maybe even to suggest assets if there's something in particular you'd really like to look at. When we have the time, I'm happy to go over as many assets as possible. So let's go ahead. Let's take a quick look actually at the fundamental news, even though this is a technical analysis webinar. As I promised, here's the AvaGo app. So on our platform, on our website, just go to Trading Platforms, click on AvaTrade Go, and you can download the app from either of the two main app stores for your mobile devices. And you'll see nice features for managing your risk. One would be Ava Protect on many of the assets, FX pairings, gold, silver. You can cover against all losses for defined time periods for a small premium cost. As you adjust the trade size and the length of the coverage period, the premium price will change. And you might cover a scalping move for an hour, you might cover a longer term move for 2 days or 3 days, etc. So this is a nice protection feature that is not seen when you trade through the MT4 platform or the MT5 platform or the MT4 or MT5 mobile app. You'll only be able to add the protection if you use the AvaGo mobile app. I do apologize for those of you that may have experienced some login issues lately with the AvaGo mobile app. There were some compatibility issues perhaps with some operating systems on phones. I think that's all been resolved with the latest upgrade. Hopefully everyone's logging in fine. And if anyone has issues, please let your account manager know, and we'll quickly get things fixed for you. The other risk management features here, if you mark your take profit and your stop loss price levels, it'll tell you how much you risk in your account currency. It'll calculate it for you like a trade calculator before you ever place the trade. Same for your take profit. It'll calculate how much you stand to make. It tells you, as you see here, what your margin requirement is for whatever trade size you pick in your own account currency. So it does a lot of things for you. Good question. No, on the demo account, you will not see the Ava Protect feature. It does not function on the demo. And so it's something you can play around with on the live account, maybe with micro lot trades, if you want to see how it feels to take live trades with it, but test it out with a small exposure, with small premium amounts. Maybe just take some micro lot trades, 0.01 or something, to see how it works, to see if you like the feel of it. I think it's certainly a great feature during times of volatility like we've had, because if the movement goes running the right way, great, you make a nice profit, the profit's all yours. If it goes flying the wrong way because some headline breaks, it's nice to be covered against all losses during those time periods. Type OK if your audio is good for you still. I've got someone saying there's no audio. All right, good, thank you. It's just the one person. I'll type a message. Okay, so let's then look at the fundamentals. Pretty positive today, in actuality, the fundamentals. If we go through the headlines, Wall Street mixed with stimulus in focus. The U.S. is on track to pass another stimulus package that should help the economy in the U.S. and thereby help the global economy with the way things work anymore between the large economies of the world. If one's doing well, it tends to help lift stocks and indices and assets all across the globe many times. So this stimulus is being eyed not just in the U.S. for U.S. assets, but globally to see what's going to get passed. Trump went ahead with executive orders because, as usual, the Democrats and Republicans in the U.S. were bickering and fighting over political leverage with the stimulus package, trying to get things passed the way that looked best for them. And so Trump had enough and he signed executive orders. There's some question as to whether he can really use executive orders for everything he did, but it looks like it's getting the Democrats and Republicans maybe to agree to something faster now, potentially. So this created some positive momentum today about the stimulus potential in the U.S. And then some positive numbers for Royal Caribbean. They're actually logging some sales, which is boosting the shares of cruise lines. Some positive numbers for the airline industry. In the US, the TSA, that's the group that does the screening of passengers before they can enter, the security folks in the airports in the US, their screening numbers went up by a lot more than anticipated, meaning more people are flying than thought. And so that helped Boeing and some other airline stocks go up. So the airline industry was boosted, and that helped some of the major indices today. As we move along, China's factory deflation slows. If you don't understand what that means, that's good news. Deflation is when the economy's shrinking. So if the deflation has slowed, it's still bad that there's deflation, but there's less deflation pace-wise. And so that's viewed as good news. And so the markets like that headline as well. So we've got basically good news in the two largest economies around the world. China, less deflation. US, possible stimulus. Cruise lines maybe showing some activity with sales. Airlines showing increased activity, larger than expected. So positive headlines. Here's another one. Saudi Aramco's profit plunged, which, okay, we all understood, probably we all understood, most of us anyways, that their profits would plunge. Oil was way down for some time. But the positive part of that is they see signs of oil market recovery. So another somewhat positive headline. Mubarak, you're mentioning that the VIX was green this morning, and so that shows there was some volatility. And that's to be expected. There can be volatility and good news at the same time. And so sometimes you will see that. And if we go back, we can look at the VIX right now and say it's down, right? Volatility overall is down. It was up a little bit perhaps earlier today, but we can see it's pretty much flat. I hesitate to say that this is down. The VIX is, and if anyone's unfamiliar, the VIX is the volatility index. Shows the amount of volatility in the 500 companies in the S&P 500. And as that number goes up, if the VIX is in the green, many times that means there's a lot of fear on the markets. And if the VIX is in the red and dropping, that means maybe good news economically. And so it makes sense that this is dipped down into the red. Volatility basically not climbing much today as there's positive momentum on the markets. And we see the positive momentum in the futures, which are green, and in the actual market when it came open is also green, except for the NASDAQ. You might say, why is the NASDAQ in the red and everything else is green? There's some fear about the tension between US and China. There's still tension between their trade deal that is on again, off again, on again, off again. Is the trade deal that they were working on prior to the coronavirus outbreak, is it going to be carried through? It seems like that's in high doubt right now. And there's a lot of bickering back and forth between US officials and Chinese officials. And for that matter, officials in lots of countries around the world are not happy with China, especially the way they handled this outbreak and maybe hiding some of the information that they knew. So it makes sense. There's some fear out there, and the tech stocks were affected the most by that because they had gone up the most, and so and they actually maybe stand to be affected a lot with a lot of the techs being related to production and industry within China. So they could be affected by tariffs and trade war type disputes quite a bit. And so we saw a pullback of some of the tech stocks, but you know, the NASDAQ's just barely in the red, just hanging in the red a little bit. So in general, positive momentum right now, positive momentum today on a lot of assets across the board, including oil, as we're looking at an improved outlook for maybe oil market recovery, according to Saudi Aramco. Okay. So let's take a look at my demo. We'll look at the technical analysis, which is really the plan in this webinar, is to look at the technical side. Just a quick review of what we looked at last week. And you know, I just pulled up the last 2 weeks of some of the pending orders we were putting and some small market moves we were doing in the webinars. And we're looking at maybe 5,000 profit here with just some small exposure trades for the size for the size balance that I have on the demo account here. But easily this could have been $400 or $500 instead of $4,000 or $5,000 for smaller balances, right? With small exposure. So a lot of these were pending orders. We look at the Microsoft move here. We did some market moves backed up by pending orders based on the fundamentals and technicals combined. And quite a few of these came through on the stocks, on the indices, even on some of the currencies. And we based it all on technical entry points and going in the direction of the fundamental news. And some of them didn't work out. A lot of them did these past couple webinars. Now let's take a look. So we still have a buy limit sitting there for Apple. The Microsoft one kicked in on a sell stop. The buy limit's waiting to see if Apple will drop any further. It's getting closer, but it's not quite there. All right, so let's look at some current opportunities. And so what do we have here? Gold. We see gold went spiking up today and then pulled back down. So what could we say? There was a lot of excitement and it's calmed down. We're reaching a support level here. I kind of like that support level, technically speaking. The news is not huge today in terms of the volatility index being way up or way down. It's something that was already mentioned by Mohammed, and that the volatility index was up slightly earlier today, and now it's down slightly. And so we're seeing, okay, this movement on the 15-minute candles on gold, up, back down. And now we see a support level. So if the news is not huge and the volatility is not swinging way up or way down, you know, you could trust, since this is a technical analysis webinar, you could choose to trust the support level, put your stop loss just below the first support level and give it a go. Now, if you're a more patient trader, you'd say, well, I'll put my stop loss below 2 support levels. So there's the smaller support level here. It hit and went up, hit and went up, hit and went up. And here's my larger support level down here. So maybe I put my stop loss below this support level. Now, obviously that requires a larger risk, right? If that's going to be your entry point, or you take a smaller trade, right? So if this breaks the support and you've already bought and your stop loss is below the second price level down here where it hit and bounced up, now you can stay with it longer until maybe it goes the right way. So as a simulation, I'll go ahead and do a market move on gold. Okay, so we've got gold here. I say maybe I do half a lot. Okay, and you trade whatever trade size you would take should be based on the level of exposure that's right for you and your balance size. So let's say I take a buy position on gold here. I say, okay, in my mind, I think the movement could retrace because there's not huge news one way or another. Technically speaking, maybe I'm looking to trust this support level. And then I say, but if it breaks that support, I don't want to give up so easy. So I'll stay with it until maybe it would break this support level down here that we see here where it hit and went up. This wick hit and went up. So if it breaks the first support level, maybe I stay with it. If it breaks the second one, I'm out. So then I say, okay, I'll put my stop loss at 213.50. Okay, fine. So modify stop loss 2013.50 as an example here. And so now I've got my stop loss just below these 2 wicks here. If it breaks that, then maybe I say, okay, I was wrong. And if it goes up the right way, I could either take profit at the first resistance level, which is still a greater potential profit than what I'm risking to my stop loss through the 1, 2 support levels to my stop loss. I'm still risking less than my potential profit at the first resistance level. If you're more patient, maybe you take profit up here at the second resistance level up here, which is a much larger potential profit. Because the news is not huge today, and many times I want to get in and out of my trade before the news has time to change too much. If I'm looking at it from a scalping perspective, maybe I say I'll take profit if it gets just close to this first resistance level. Maybe I say 2045. So then I go here, modify or delete, take profit, 2045, which is still a pretty substantial movement. Okay, so now we see take profit here, slightly more potential profit than what I'm risking to my stop loss. And you can play with that entry point, or that exit point, I should say, for your profit. Maybe I want to get it a little bit closer to that resistance level. There. So now I'm still well below the resistance level enough that if it gets close, I'll take my profit. Why do I take the profit maybe with this concept before it gets actually to the high point here where the actual resistance level is? Because sometimes it reverses just before the resistance level. And so many times you take your profit just before that first resistance level that you see on the chart. Type OK if you're with me on this general move, this general idea of trading up off the support, trusting that the support level might hold because, hey, there's not huge news today, and maybe getting out at that first resistance level. If you have any questions, let me know. All right, looks like everybody's squared away with that idea. Okay, so gold can be tricky sometimes. Sometimes it's been going up with good economic news. And actually, a lot of times it's been doing that of late because the bigger picture, folks are still looking at thinking that there could be some economic depression longer term over the months to come. And so we don't forget that there is still a global pandemic, even though the markets seem to be improving and reaching some highs with the NASDAQ and the S&P 500. There's still that doom and gloom on some people's minds that, hey, if gold drops, maybe it's time to buy in again. The bulls tend to push gold back up lately, even with some good economic news. Mohammed, that could be what already happened, right? We see gold plunged over the last hour or so. That might be what helped push it down, was some positive momentum like from those headlines we were looking at. Right now, we're doing a technical move. Maybe there's reason for gold to keep dropping with some of the positive momentum we saw. But technically speaking, that's not a bad entry point off that support level. In the near term, we're up $40 on this move already. If you're a scalper, you could already close it, right? Many traders will get in and out quick and close a trade like this already. Why? Because maybe their stop loss was just below that first support level. You could have had your stop loss instead of down here where I put it with a more patient move. Remember I said some get in and out of trades quicker and are more scalpers. You might have had your stop loss just below that 15-minute candle support, which was right here. And so this profit of $40 or $50, that might be all you were looking for, because that's all you might have been risking. And you're already out. And why did you trust the support level on a short move to bounce up? Like we said, the volatility index was down slightly, but not much. Didn't seem to be huge reason for gold to break support levels. No big breaking news that was hugely positive or hugely negative. So sometimes it's easy to take a scalp and say, there's that support level. We saw it, support, 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 support. So if you're taking a scalp, okay, done. Made my $54 profit. Okay, or could be $5 profit if you have a smaller balance. But you understand, if you're making even 1% profit a day on average, then at the end of the month, that's a 20% gain. If you can average 1% gain every trading day, approximately 20% gain in a month, if you're making or averaging 1% gain a day. So a couple moves like what we just did off of an opportunistic entry point on the short candles, 5-minute, 15-minute candles. Look at the support. Look how many times it held. We're watching the fundamentals just before we got on the chart and saying, hey, doesn't look like huge news should be causing support levels or resistance levels to break through so easy. So we're waiting for the bounce off the support, and there it went. You get out before the news can change. That's the idea of scalping. Use the technical entry points, get in and out before the news can change. You get in at an opportunistic spot. You get out when you get the profit you want. And you could be following a strict plan that you just want to gain X amount each move. And on a move like this, if you can win 2 out of 3 and you're taking a trade size to gain 1% per move and risk 1%, 2 out of 3, you're up 1% on the day. That's a 20% gain in a month. If you average that over 6 months, you've already more than doubled your balance in 6 months. So you don't have to go after 10% profit on a move, 20% profit in a day. You don't have to do that to have significant gains. And many times if you try to do that, it can get you into some trouble if it swings the wrong way. Okay. So not to say that you can't be more aggressive. I've seen folks go with larger exposures percentage-wise and do very well. I've just seen more people not do so well. If you're trying to be overly aggressive with trade sizes, it kills your flexibility to stay with moves many times. But in the end, I'm not here to tell you how to risk manage in terms of what's right or wrong, but just how to calculate, how to understand your risk management, and then you decide your trade sizes and exposures. Okay, so here's Bank of America. We could look at that. We had this up last week. If we look at 15-minute candles, what happened at the open today? We see it gapped up from the 7th to the open today. Let's see here, to the 10th. Okay, 7th to the 10th. We see a gap up. All right. So that shows positive momentum. That kind of fits the narrative that we saw in all the headlines. If I'm looking for an opportunistic entry point, look at the bottom of this, the top of the gap, I should say. The bottom of this drop could potentially find support at the top of the gap. That's a technical trading strategy. To look at the gap, to know the direction of the momentum that day. The gap tends to serve as a support or resistance. And so the top of this gap where it opened would be our support level. We see it's close, this movement. So maybe I say Bank of America, technically speaking, looks like it could climb. So maybe I say, okay, I'm going to buy. Okay, so now I'm in on a buy on Bank of America. Why did I do that? Because I only have to put my stop loss into the gap. If the movement re-enters the gap, many times then that's a sign that it could fill the entire gap. No guarantee, but that's a technical strategy. If a movement re-enters a gap, it doesn't have a resistance level then until it reaches, or a support level, I should say, in this case, until it reaches the other end of the gap from, in this case, Friday's close. So I put my stop loss into the middle of the gap. If this movement breaks below the open and enters the gap that far, then it could potentially keep going. So maybe that's a spot, technically speaking, that I'd say, okay, I'll get out of this buy position if it breaks below the open, the price that it opened at today, which was here. So my stop loss could be down here, maybe 26 even. So if I get in here then on this market move, I say modify 26 even on my stop loss. And then what about a take profit? Well, maybe somewhere near the high that it reached twice today. It hit here, it dropped. It hit here, it dropped. So how about this first peak? The first resistance level here would be 26.7. Okay, now I'm in. How much am I risking and what's my potential profit? I say my stop loss. Oh, I put the wrong price. It's good I look at the line, right? So I meant to put my stop loss not all the way down there, but in the middle of the gap right there. There's the top of the gap. There's the bottom of the gap. Here's the middle of the gap. There. Now I'm risking about half to my stop loss, and it would have to break below today's open price before I give up. I'm risking about half compared to my potential profit. And if I want to just make sure it had to have a true break of the support, I'll just cheat it down a little further. Okay, now it would really have to get below today's open for me to give up on it. It would have to enter into that gap, and my potential profit is still about double what I'm risking. Okay, type okay if you're with me on that strategy here to take an opportunistic entry point, because Bank of America has dropped over the last few hours. So opportunistic entry point, if you're buying, technically speaking, we're below the support level, which is the open price early this morning, which opened higher than Friday's close. So we have a gap, an upward gap, which serves as a support level at the top of that gap. Okay, great. So another move that if you're scalping, even if it was going to break into that gap, many times you'll see a bounce as it reaches the opening price. It'll bounce back up before it does break it. So if you're scalping, you don't care if it breaks it. You just hope that it bounces up before it breaks it. Okay, so you could be in it for shorter term move, just a small bounce, and you take your profit, or a longer term move to the first resistance level, which is still a scalp. It's not a very long term climb. Or if you're obviously, if you're a long term trader, you'd be looking at 1 day candles here, 1 week candles, etc., to find your out price. Gavin, there's nothing that says it's better to buy than to sell as a general rule. Right now, the reason we're simulating a potential move here that you might consider as a buy is because of the support level. It's a technical analysis webinar. So we're finding a technical entry point to buy up from a support level in this case. Had it broken into the gap already, we'd be saying sell. Why? Because it broke the support level in that case. In reality, it did not break the support level. It's just above it. So we're saying, okay, technically speaking, the strategy could be to buy with your stop loss below the support level. Now, Gavin, you might say there's still also a preference to buy. You weren't completely off because we looked at some fundamentals too, right? Technically speaking, a technical trader would buy here anyways. A purely technical trader doesn't care about the fundamentals. But we also looked at the fundamentals and said, you know what? There's a lot of positive momentum with the headlines. So it also helps to say, okay, the fundamentals might be on your side along with the technical entry point here to buy. Okay? Good points and good questions. If anyone's having network issues, let me know. Someone's complaining, but I think most everybody's okay with the audio and everything. And perhaps I bumped the plug into the mic. If I did, I apologize. Okay, so there's been a couple people asking to look at NASDAQ, so let's take a look. Let's take a look. I think the downward momentum on it isn't necessarily going to sustain itself because of the positive headlines we saw. We could take a look at, perhaps it already bounced up from today's lows. Let's look at NASDAQ. Okay, so, and by the way, if you're a scalper, okay, let me close this scalp. $12 profit, right? Again, if I'm trying to win 2 out of 3 and gain 1% a day, yeah, maybe I could already call it quits, right? With just those 2 moves. Or you can keep going. Maybe you win 6 out of 9 instead of 2 out of 3. Gilbert, there's no one best time for trading, but I'll tell you this, you get a lot more action on the charts when you have multiple markets overlapping. So if that fits your strategy to have more movement on the charts, larger movements, bounces and reversals and breakthroughs, then perhaps when the US market is overlapping with the European market, which is right 9:30 a.m. New York time until just a couple hours ago when before the European market closed, that overlap gives you a lot of volume of trading and many times can get good, what they call price action on the assets. Some movements where you get good bounces and good breakthroughs, that sort of thing. Very good question. But some strategies do better with less volume of trading. Depends what you're looking to do, right? What we're looking at now are strategies that work well with maybe a larger volume of trading. So with the US market open right now, even though the European market has closed. There's still a lot of European trading going on. So there's a lot of volume of trading now. And so we're seeing a lot of that with some of the examples that I'm simulating. Yeah, this webinar is recorded. You can find all of the webinars on AvaTrade's YouTube channel. Okay, just go to YouTube, keyword search AvaTrade. You'll find our channel, and there's a section for English webinars. You'll find them. My webinars, along with our chief market analyst webinars as well. Naeem Aslam does some recordings that are there as well. But all of these sessions by the next business day are uploaded. Okay, so what do we see here? We see NASDAQ took a big drop and it pulled right back up. Okay, not surprising. The NASDAQ has been quite bullish. So I think we need a bigger picture to see what's happening here. So we've got a support level here that was broken. Okay, support, support, support. It broke that support and then came rocketing back up. And so technically speaking, this is broken back above this support level as well. Support, 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 support. Broke below it, broke back up. Honestly, I don't like that movement right now. It's looking a bit unpredictable, the NASDAQ. And it moved against the grain with the rest of the market. So right now, technically speaking, it's above the support level. The move is to buy. Okay, the move is to buy because it broke back above this support level, and your stop loss, if you're scalping, could be just right back below. If it breaks back below this support level, then you'd be out. Okay, so if I'm doing a purely technical move, I'm buying on this. Okay, and I'm putting my stop loss right down here below the first support level that it just broke back above. So maybe at 11,035. 11,035, I could potentially put my stop loss just right back below the support level. If it breaks back below, I could be out, right? And then my take profit could be the first resistance level if I'm scalping. There it is. It broke through. It had enough momentum not only to climb all the way back up here, but to break above this resistance level, as we would call it, because it was below it, its resistance. It broke back above it. So maybe it has enough momentum at least to reach the next resistance level before it would break back below the support level that it's above. So just going with momentum here, 11,130 seems realistic. It could reach. No guarantee, but the momentum shows it could do that. So 11,130. There's my take profit. So my take profit is just before this resistance up here, and my stop loss is just below the first support level. And so I'm just going with momentum and seeing what will happen. Okay. And so not a big deal either way. You want to adjust your trade size to be the right exposure for yourself and put your stop loss in a spot that makes sense, whether you're scalping or being more patient, etc. Okay. As I said, going into this move, not something that looks exciting to me entry point wise. It's something that I'm buying in a situation after it already climbed a bunch, which is not technically speaking advantageous. I'm buying on something that already dropped through this same support level once today, right? So not the most exciting thing to make a move on, but if I was going to make a move, that's maybe the move I would make, to buy up off the support level because it just broke through it, and have my stop loss close because I don't trust the movement right now so much. Okay, not the most attractive entry point, but we'll see what happens there. All right, so let's look at the S&P 500. To me, much more attractive as a move if it verifies its movement. So here's a resistance level. What kind of pending order could you put above the resistance level that formed today? Here's the high point, resistance, pulled back down. I'm sorry, pulled down here, tested it again, second test, came down, and now the third test on the resistance. Rather than making the move now, what kind of pending order would buy if it breaks the resistance? A pending order that your open price would be up here if it breaks today's high. Yeah, buy stop. Okay, and I like that idea better than jumping in on the NASDAQ example that I simulated. And you can see what the NASDAQ example is doing. It's, you know, it's hesitant. It's pulling down some now. But this move would have to have some momentum if it breaks this resistance here, right? So you could put a buy stop at 33, let's say 60, and it would be clear of the resistance and verify an uptrend before you get in. So, and you could do a double move, couldn't you? You could sell off the resistance and buy if it breaks through. So in this case, this is more opportunistic, selling from a high point. I could say, okay, let me sell on S&P 500. If it breaks above the resistance to 33.60, I'll get out. So modify stop loss 33.60. Okay, so you see it. If I give up on my sell, it's only because it broke the resistance level and came up here. And if I get out on my sell, I'll get in on a buy for the same reason potentially. We could go to a buy stop, as was suggested already by Sharon and Justin and some others. And so we go to pending order, buy stop, that buys from a higher point. At price, the same spot I'm getting out of my other, 33.60, place. So if the move comes up here and hits the stop loss on my sell, then I'm in on a buy because that means it broke the resistance. And then my stop loss could be back down to 33.50, a limited risk on the pending order. It would have to break back below the broken resistance before I would give up on the buy then. So there's my stop loss back down. So in this case, I'm in on S&P 500. I'm in on a sell. Technically speaking, nice entry point just below the high of the day on a resistance level that's already held twice. And I'm ready to back that up with a buy stop if it's wrong and it breaks through. Both of them could lose, but we only need, remember, on situations like this where maybe you put your take profit about 4 times further than what you're risking, or 2 or 3 times further than what you're risking, you only need to win 1 out of 2 and you've profited. Okay, so even sometimes a 40% win percentage can bring you overall profit. Okay, so with this, I might put a take profit at the first support level, maybe 33.30. The market move, so let's modify take profit 33.40. Technically speaking, why do we put the take profit? Oh, I actually read it wrong. 33.30, I'm sorry, 33.30. Why do I put my take profit here at 33.30 or so? Because that's just before the first support level. So now my potential profit's more than double what I'm risking. And then the same thing for my buy stop. And I can get a better look at the buy stop. There's no resistance over here. So if the buy stop kicks in, I can just pick a spot for my take profit that is the amount that I want to potentially make. And so if I'm doing ratios of maybe my take profit being double what I'm risking, so then if my stop loss on, let's make sure I'm opening the right one here. 33.30. Oh, that's my sell. Sorry, my buy stop. I need to put my take profit. And if I'm getting in at 33.60 and I'm risking 10 to 33.50, then maybe I want 33.80 for my take profit, which means I have a potential profit twice my risk on the buy stop. If I lose on the sell and the buy stop kicks in and I win that one, I've made an overall profit on that double move. Okay, so we already see the S&P in profit, and we see, look what's happening to NASDAQ. You see why when your entry point is not advantageous technical analysis wise, why sometimes maybe it's not as good of a move. technically speaking anyways. So we see that as anticipated, the NASDAQ example doesn't look so good. But look, when we're going with a proper technical entry point, the S&P 500, it looks nice, okay? So two flip examples of what can happen. Okay, so in the end, what's the lesson here? Maybe trust your instinct on technical entry points, right? And you see the huge difference in potential. So let's go to crude oil. Crude oil's climbing. Why has crude oil been climbing for the last 4, 8, 12, 16, 20, for the last day, last 24 hours of market time? Anyways, so we saw the article as we got started. Saudi Aramco's anticipating that the oil market is improving, etc. Okay, and again, if you're scalping, we probably would never have opened the NASDAQ trade, and we could take a profit already on that sell position that we had in there. Very simple. This one, let's still let it ride. Let's see what happens with NASDAQ. We can be patient on that one. Because in the bigger picture, I think the move could be good. You just have to wait and see sometimes. Let's take a look at crude oil entry points then on the smaller candles. We see resistance here. We understand why oil is bullish. Some positive fundamental news maybe about it. The news that China's inflation is shrinking, or I'm sorry, deflation is shrinking, also is potentially positive news that's helping oil. And the stimulus that looks like it will pass eventually here in the US is helping oil be bullish as well. Okay, so all of those things are working in the favor of oil. So we've identified for sure there's an uptrend. What would be your move in this case? Well, one move is to recognize that there's a resistance level here. You could have a buy stop pending order above the resistance. If it breaks that resistance, oil could be on its way up further. And when we look at one-day candles, we can see we're already above the top of this old gap that we were looking at for weeks and months. Okay, this is a new support level. It took some time to fill this gap, test it, test it, test it. Now it's above the top of that gap. Okay, it's above it. So that's a major support level here. So if I'm buying on oil long term, let's flip. Let's go beyond the scalping idea. And let's say, okay, what about a longer term move? If I'm trusting the technical analysis that the top of this gap is a major support level, then, and it already broke above it. So then on a longer term move with oil, I could say, all right, let me buy on oil, okay? And put my stop loss back into this gap. If it re-enters this gap, there must have been major bad news, right? So if the price enters into this gap, which would be maybe here, if it breaks below 40, then it certainly re-entered the gap. So I could go oil, modify or delete, stop loss 40, or maybe we go below a round number, 39.9, then it certainly re-entered the gap and I might give up on the buy position. Take profit could be the top where we see the next major resistance level, which is here. Resistance and then plunge, right? So that's the next major resistance level. That's way up at 48.25. So if the price hits 48, that might be a logical spot, technically speaking, to take profit. And so you get on oil here, modify 48, getting up to that next resistance level just before could be a spot to take profit. So on my longer term move, I'm risking a quarter of what my potential profit is, or maybe a third of what my potential profit is. The platform we're on is the MT4 platform. Okay. All right. Any questions on the oil, on this longer term example that I simulated here as a technical analysis entry point for a longer term oil move with, in this case, a support level below and a resistance level much further above? And this is longer term. So we're looking at 1-day candles. We're looking at a large old gap that it broke, not only filled the gap, but broke above that gap. So now we're using that as a technical support level. No, MT4 and MT5, Miguel, are 99.9% the same. If you can use one, you can use the other, no problem. Okay. So we see the NASDAQ trade, again, serving as an example of why, technically speaking, it makes sense to wait for proper technical entry points. Now, if you're being more patient, longer term move, you don't have to be as exact on the entry point, right? So again, let's let the NASDAQ trade run. But for a scalper, that wasn't a good entry point. And we said it before we opened it to show an example of the difference between trading up off a support level, trading down off a resistance level, rather than buying on a movement that was breaking up and below, up and below, up and below the support and resistance, kind of a confusing movement as I described it before we took that move. Okay, so let's look at maybe some other regions. The FTSE, similar movement, dropped, came back up today. Okay, the Nikkei, dropped, recovered. Okay, we're seeing very similar movements on a lot of these. The DAX, again, if we look at it and we zoom in, we see the resistance. So if we're going with the technical analysis, we say, okay, resistance level, sell on the DAX. Small resistance or small risk to get above this resistance that formed today, much larger potential profit if it drops to the next support level. So purely technical move, you could sell off this resistance and see what happens. So we go technical, sell on the DAX. We put our stop loss just above the resistance, 12,735 maybe. $12,735. Potential take profit down here, maybe 12,650. And away it goes. Okay, so what's my risk? About a third or half of my potential profit. Again, this is a purely technical move. I don't really have a big reason to sell on the DAX right now, other than technically speaking, this is an advantageous entry point just below a resistance level that's held twice. I'm close to that resistance level, so I don't have to risk much to get above it, and I could go after my potential profit just before this support level down here, where it hit and went up, hit and went up. So if it gets near there, that might be a spot, if you're scalping profits, to take a profit there. Okay. So a number of examples here. We'll let these run through, see what happens. I still haven't given up on the NASDAQ, but if the NASDAQ goes bad, potentially the DAX goes good, right? And again, if you're after a 1%, 2% growth per day, you don't have to be right on every move, right? You just need to pull some profits enough to scalp them out of the market, as they say. Okay. Any last questions before we end things? We've been going for almost an hour. Any quick questions? Yeah, I wish we had time to look at some more assets. Dow Jones, Euro. I know the Euro's been bullish today. The pound, maybe not so much. Dow Jones has been strong, going with that positive fundamental news that we saw earlier. So you could look for some entry points on the Dow Jones as well. I think you'll see a lot of movement. Also, the Euro USD was trending nicely. All right, everybody. Thank you for joining. Good luck with your trading. I think you shouldn't have much trouble doing some scalping moves. I think you'll get some nice price action, as they call it, with some bounces and some breakthroughs, some combination market moves, backing yourself up with pending orders could pay well today. Okay. All right, everybody. Thank you for joining. Good luck with your trading. We'll be back at it on Friday this week. Okay. All right. Bye for now.